Hello, this is Mike Swanson, and you're listening to the Wall Street Window podcast. In a few moments, I'm going to have a very special guest. I'm going to be speaking with Chris Vermeulen. Chris runs the website, thetechnicaltraders.com. We're going to talk about what's going on in the stock market today, where we think that's going, and an opportunity we both see in silver. We think it's lining up. Now, there's an interesting article this morning by CNBC about a flood of new traders coming into the market and buying stocks for the very first time. Now, there have been similar articles about this in the past couple weeks on other websites. Brokerages are reporting the opening of hundreds of thousands of accounts apiece. Robinhood has seen a flood in particular. Ameritrade said that these are almost all certainly people completely new to the market because they can tell that they've been looking up data on their website about how to do very basic things like enter orders. So this is good and bad at the same time. It's bad because I'm fearful that these people are actually getting caught up in a trap, that they may not understand how the market actually works. The good thing, though, is that I started out with basically nothing when over 20 years ago, but it was only $15,000. And if these people, are willing to learn and do the work, they can be very successful going forward. I started making all my money really in the late 90s and in that bear market that came after it. And what I hope to offer in these video interviews are discussions with top traders to help people just getting started out in these markets. There's no reason to navigate these markets by yourself, much less do it because you're reading some news headline or trying to chase action of yesterday. You got to be forward thinking, and that's what me and Chris are going to talk about. So one quick break and then on with Chris Vermeulen.
In Denial: Secret Wars with Airstrikes and Tanks by Larry Hancock. Secret wars became a staple of U.S. covert operations and are still happening today. Larry Hancock's book, In Denial, rips the cover off many of them. Using new files, it exposes things about the Bay of Pigs that no one has ever written about before. It shows why it really failed and why the United States did not learn from it. It also shows why other countries today are doing secret operations with more success. This is the book that puts what some want to deny into the light. In Denial: Secret Wars with Airstrikes and Tanks. Larry Hancock. For more information, go to larry-hancock.com. Pick up your copy of In Denial at amazon.com in digital or physical form.
Hey, I'm good, Mike. How are you?
I'm doing great. Well, I've put on my website this week 2 very interesting articles you wrote. One's about silver, one's about the Russell 2000. I thought maybe talk about the Russell one first. It's kind of funny. Over the weekend, the Wall Street Journal had an article saying the Russell 2000 is going up and small caps are going crazy and why is this happening? And now the past 2 days, it's down more than the stock market. Almost as we're speaking, it's down like 3.5%, much more than the Dow is down today. And in your article, kind of I posted up this morning, almost predicted this in a certain sense.
Yeah, I mean, headline news is usually in the media is usually pretty much dead wrong when it comes to the stock market. So, I mean, they say small cap stocks are rallying and they're on fire, but reality is they're not. I mean, there's the leaders and the laggers. And if you look at the market, the Nasdaq is leading. It's tech heavy. Big companies are dragging the market higher, making everyone have false beliefs that things are good. And then you look at the Russell 2000, the small cap stocks, the majority of stocks, and they are far from the highs. They're underperforming. They're breaking down today. I mean, it's totally opposite of what people are thinking and feeling. And that's what the market is great at doing, is pulling the wool over the average investor's eyes, making them feel good when really, they're buying stuff that is about to most likely not do so well.
Yeah, I just kind of think of the Russell as sort of being more volatile than the S&P 500. I mean, it fell more in March, and then it bounced harder because it fell more, I think. And so many of these stocks, like just like airline stocks, for instance, they just completely crashed. I mean, United Airlines was $90 in February. It went to like 15 and then bounced up to 35, and now it's near 20. It's like, but that's like one stock, and there's so many stocks like that. But where do you think this thing is headed for over the next few months or so?
Yeah, in terms of the overall stock market, I mean, I hate to be bearish, but I'm really bearish. Like, everything is showing signs that there's distribution going on, distribution selling, and I actually talked with subscribers this morning, showing the last 2-3 weeks of the intraday charts and how the market has this way of deceiving people and how they walk the market up in post and pre-market hours. When volume is super light, the market just drifts higher substantially, and then when regular trading hours opens, when there's lots of liquidity, the market usually trades sideways or lower, and you look at the volume, and it's just heavy distribution selling, and it's the big players are unloading positions into the average Joe's hands. And you look at TD Ameritrade, I mean, record amounts of new accounts opening for the first quarter, and it just goes to show that this volatility and this big drop has everyone thinking they should be trading. They all think the bear market is over and that we're starting a new bull market, and so people are piling in. And really, the big money and the technicals that I'm following are showing this is the beginning of the end, and this is a sucker's rally. So, looking forward months from now, I mean, I think we're going for that double dip, the March lows. I think we're going to go way beyond that, and it's full of bear market. I think is if it hasn't started yet. I mean, it is starting, in my opinion.
Yeah, in some ways, it reminds me of 2007. In the fall, the stock market started to decline, but then it had a rally. I think it was like November, end of October or so, back up towards the 200-day moving average, but it never went through it. And it's sort of the same thing now. We've rallied back up, but could never get through it on the S&P and the Dow and the Russell, and it's like people ignore these indicators. I don't understand why they ignore them so much. What do you think is going on?
Yeah, 200-day, the 150-day. I mean, they're pretty important moving averages if you get stuck under them, and we are. And if you look at the market always has a funny way of how it moves and retraces. I use Fibonacci extensions and retracements all the time, and the stock market fell 35%, the SP 500, and now it's rallied 35%. It's back up at the 618 retrace, which is a pretty extreme level. And if you go back in time, there's a lot of volume that traded at this 2,900 level, 2,900. It's a major resistance. And now big sellers are starting to step in, volume's picking up. The underperforming stocks, like small caps and individual companies, they're breaking down and moving substantially lower, and they're leading the market. And that's the sign that, I think we're on the last leg here of this kind of big bounce, and it's on the verge of rolling over. So, when you can't get above support quickly, I mean, you're probably going to go back down, or through resistance, sorry, you're going to go back down to support, which are those March lows.
Well, I'll just give you the counter, I guess, argument, and that would be that, okay, the stock market fell because they closed the whole economy down and locked everyone in their house. And now some states, United States, are starting to open back up. Others should be done in that process in a few weeks. Last week, in fact, Donald Trump kind of said we've had victory over the virus. And then at the same time, the Federal Reserve, they started buying bonds on Tuesday, a giant bond buying operation. They're buying ETFs. And so all these things together should set up, everyone's going to go back to the restaurants and everywhere, and everything will just boom. So the stock market should go up too, and we'll have a second half boom, and it'd just be incredible. And so how would you respond to that?
Yeah, well, you're dead on. There's no doubt this is kind of a Fed-induced and an excitement-induced rally because, yeah, the Fed's dumping money in. we investors are feeling like we survived the virus and now it's just going to linger. So they feel good. They're buying. Economy slowly starting to open. Spring is in the air. People just naturally feel good on many different levels, and that's why I think there's such a flood of people moving into the trading market and investing and putting money in here. So it's all fueled this big bounce, and that's the big question: is this a bounce, or is it the start of another big rally? Really defy gravity for another big push to start another bull market. And I'm not sure if they can or not, but the key is you just got to follow the trends, play the market, not try to predict tops and bottoms, which I don't do because long term, I mean, it's just a painful game to play. So I wait for confirmation of any trend depending on the time frame I'm following and just follow the price as it goes. It's not about picking the tops. It's not about getting out at the bottoms. You just play it as the market unfolds.
Well, I think those are key concepts. I mean, there's, as you mentioned, there's lots of new people coming into the stock market. Maybe they're home, they can't work, or whatever the reason is, or they just see it as a great opportunity and they're trying to buy. But there was an article I saw where on Ameritrade they said that all these people opening up new accounts are completely new because they're accessing articles about how to enter orders in and like the very, very basic information. And on one hand, I think it is sad because I'm in complete agreement with your views on where you see things going. But on the other hand, it could be a great opportunity for these people. I started with nothing. I think you did too with the brokerage account a long time ago. And if they, take it seriously and really learn, and that it's not just chasing something or some news idea or whatever. It's like what you said, the trends, that's what's important. If you stick with the trends or figure them out, or when they change, that's how money is really made. And that's, so these people, if they could, I believe, get into your information or buy books of whatever and really take it seriously, they have a great opportunity. And in accordance with that, I have an article I posted earlier this week that you did about silver. The big move in silver may be right now. So, and it's again talking about the trend in silver. You're not making some claim that silver should be 1,000 or something. You're talking about the real trend. So what do you see happening there?
Mm-hmm. Well, just to quickly touch back on your point with all these new investors, I mean, traders, this is the time. If somebody's getting involved in the market, this is like one of the biggest opportunities. Like, as you know, starting a bear market can be life changing if you know how to take advantage of it. And so if somebody is getting new, I mean, understanding the major trends, how to trade a bear market, you wrote a book on it. I've got a guide on it as well. And it's, if you actually figure it out and follow it with rules, I mean, there's huge money to be made. So all these people piling in are technically doing the right thing. It's just, are they going to trade off emotions and news, or are they going to like actually sit down and trade like a professional and follow rules and follow strategies that allow you to profit from this market? So that's the key thing at this point in the markets, is this is a huge opportunity if you know how to trade it. As far as silver goes, silver, I mean, it's the same analysis in terms of follow the trend, and silver it's still struggling. I mean, it hasn't started a bull market yet, and to me, it's not going to be in a bull market till it breaks 19 or 20, which is a long ways from where we are. It's like a 25% move. I like to typically play the leaders, which gold broke out last year, and it's been in a raging bull market, and it's pushing. Testing the highs. Large cap gold stocks are also in a bull market. Silver, though, percentage wise, when it does kick into a bull market, I mean, I think it's got unbelievable potential, a lot like we saw in 2010, 2011, where, it can go from $16 to $48 in a very short period of time over a couple of months. So silver is that kind of silver rocket ship that once it ignites and the money starts to flow, it's like a feeding frenzy of piranhas buying it up. And so I like it because it is kind of that rocket move in a commodity that will eventually show its face and give us an opportunity.
Well, one positive thing about silver is that the silver mining stocks are doing very well. So, for example, Wheaton Precious Metals, it went to a new 52-week high in April, and when it broke 34, now it's at 43. I mean, so hopefully that's a leading indicator for the silver bulls.
Yeah, this like the silver miners ETF, the symbol's SIL. I mean, it's showing the same thing. It got crushed. It's rallied, 100%. It's back up near those highs, and it's on the verge of kicking over into a full-out bull market. And once this level's broken, it's going to be, this is the start of what we saw in 2016. This is the start, I think, of a major run higher in all these individual companies, the sector in general. So I think we're going to see, on the weekly chart, it'll be a string of green candles going up the chart with some pretty explosive moves. We're not there yet. We're potentially only a week or two away, though. But this chart is there. The setup is there. I think the economy and the financial system is kind of in that position for it to really start to thrive. So it's going to be real exciting, the precious metals market, I think, going forward from here.
Well, I guess as we wrap up in the final moments, if you could tell people what you offer on your website and how you can help them get started.
Sure. Yeah. So I offer two main services. One's an investing service for anyone who wants to know about when to be long for bull markets with your retirement fund, when to own an inverse ETF or be in cash or bonds. And it also covers precious metals. And it's a really slow investing service. It's just for those who are very passive and want to just make sure they're on the side of the bull market, they're on the side of the bear market. They could profit from both. Trades only last a year, or they last a year to really 10 years. We're still partially long in this bull market. So it's very slow, but this is the time when you need to know where your retirement money is. And so that's the technical investor. And then I've got my swing trading newsletter, which is the technical trader. And we focus on a morning video every day before the opening bell. I recap what's happening on the metals, the indexes, bonds, volatility, oil, and we cover, what we're looking for, how it's going to affect any of our open positions, if we think we're going to hit some targets today, and just walk you through and teach how to read the charts every morning. And then you get my trade alerts via email and a mobile app.
Well, great. And I follow your stuff. Obviously, reprint some of your articles on my website. And really appreciate everything you do. So thanks for taking the time to talk to me and everyone else.
Yeah, well, thanks for having me, Mike. Take care.